Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the tech sector. So the tech sector formed a bullish reversal candlestick on Friday and really was the reason that the market didn't pull back and drop to lower lows. So the bulls definitely started to see that momentum shift on Friday, and they saw follow through to the upside today. So we are right back towards all-time highs, and we're looking at resistance right now of 58.09 and then 58.33, a very strong recovery for the tech sector, which has been leading the way forward in all of 2017. So the bulls are back in full control. We did not see follow through to the downside, inside bar with the gap up open today, and on the weekly time frame, no sign of any kind of weakness, still holding exponential supports, nowhere near losing a higher low pattern that has been in play for a very long time at this point, over multiple years. And the bulls are still very strong and looking for a bullish MACD cross if we can see new all-time highs. So it's really the tech sector is behind this recovery in SPY. After a very weak day Thursday, a very weak bounce attempt Friday, it was like I said, the tech sector held everything up on Friday, and this follow through is keeping the market strong. And because Apple is such a big holding in XLK, Apple right now is a very significant driving force in the market as a whole. Because just to narrow it down, you've got Apple with 14% of the holdings of XLK, and XLK in the tech sector is the strongest, is the most weighted sector in the S&P 500. So essentially, Apple is probably the most individual important company in the S&P 500, I would say, with the correlations we're currently seeing. That's obviously not always the case, but when I see the correlation with the tech sector driving the market in both directions and knowing how important Apple is to that sector, that's why I'm making that statement. So Apple on the daily time frame, big time recovery. Even though we did see that dump on last Thursday, we did not break the higher low pattern ever since we set that low from earnings. The bulls have earnings momentum in their favor. So higher low established. We're heading back up towards resistance. Only a couple resistances here, 160.21, 160.64, and then the all-time high of 161.20. So the bulls are remaining in full control of Apple. As long as that keeps up, the tech sector will stay strong. And as long as the tech sector stays strong, SPY is not going to see any significant pullback. Weekly time frame upper Bollinger Band resistance for Apple has rejected the price the past 2 weeks. 160.42 is that level, and we are currently at that level. So we will be watching to see if we can get over that. The bullish MACD cross on the weekly is following through, and if we can't get over that level, we are likely to not see too much more upside this week because we're right under that resistance right now. Granted, however, we have gotten above that level multiple times in the past 2 weeks. It's just the inability to close over it. So we could still see some upside. Question will be, where do we close on Friday relative to that weekly upper Bollinger Band resistance? Facebook on the daily time frame also keeping control and strength. It is the number 2 tech bull that I'm watching behind Apple. Still holding on to its bullish momentum following earnings. And a close, let's see, we got the middle Bollinger Band holding 2 days in a row. And a strong close up near the high of the day. Resistance is 171.08 and 173.05, and the bulls will look to break the lower high pattern to try and see a new all-time high. That support of 166.91 broke only by 6 cents, so we now have a double base of support down at this level, and that's our new level that the bulls need to maintain to keep higher lows. Bull flag on the weekly time frame. This is very healthy 2 weeks of consolidation following the 3-week breakout. And the bulls will be looking for continuation if we can hold this exponential support on the weekly time frame. Bulls are looking really, really good. And they're looking just as good, if not better, than Apple. I'd say they're looking the same in terms of strength. Apple is closer to a new all-time high, not by much. But bottom line is they're both lead tech bulls. So whenever there's market strength and whenever there's tech sector strength, these are 2 names to look at to play bullish due to the lack of resistance and the bull momentum that they are still enjoying thanks to their earnings report. So I appreciate you watching. We will check back in tomorrow, and have a great night.